Nigeria's capital market expects 1 trillion naira this week as stocks resume upbeat following marginal gains in week ended. Nigeria's external reserves decline, though consumer confidence is projected to rise in the fourth quarter of this year. This is Business Express reaching you from our Abuja studio. I am Musa Abubakar. Is Nigeria having a revenue crisis, and what is the role of tax in addressing the challenge? This edition of Business Express seeks to answer this question as we look at expanding the tax net versus lowering tax for more productivity. Now let's begin the program with CBN. The Central Bank of Nigeria's Consumer Expectation Survey has predicted a positive outlook for next quarter, 24.7 and 30.1 points for next quarter and the next year. The outlook, which was contained in the third quarter consumer confidence, attributed the fourth quarter projection to expected increase in net household income, as well as the anticipated improvement in Nigeria's economic conditions and expectations to save a bit or have plenty over savings in the next 12 months. It also noted that the consumer expected borrowing rate to fall while the naira was expected to appreciate in the next 12 months. The unemployment index for the next 12 months remained at 25 points in third quarter 2018. The test for third quarter 2018 was conducted during the period September 24th to October 4th, 2018, covering a sample size of 1,770 households drawn from 207 enumeration areas across the country, with a response rate of 96.9%. Figures from the Central Bank of Nigeria Friday showed that the country's external reserves stood at $42.34 billion as of October 25, 2018. $47.28 billion was recorded on July 25, 2018, an indication that the reserves dropped by $4.94 billion within the 3-month period. Now, an effort aimed at addressing the shortfalls experienced by government in its bid to maximize tax administration in the country is underway in Abuja. Correspondent Chimobi Walter Naji is at a one-day seminar to this effect on the application of innovative models for effective tax system. Chimobi, what are the expectations from the seminar?
It's really a good thing to note that local industries in Nigeria are now focusing attention in finding IT solutions to tax system and internally generated revenue in Nigeria, especially bearing in mind the large informal sector that we have in the country. And of course, I have with me here the representatives of the Nigeria Governors Forum Secretariat, Alhaji Ahmed Abdul Wahab. Thank you for joining us.
Thank you so much.
All right, so one of the major problems that we're having in Nigeria, first of all, is the issue of data collection. How does this affect tax generation in the country?
On the informal sector, you don't have data. So if you don't have data, there's no way you'll be able to actually know who is supposed to pay or who is paying, which is the challenge that hopefully this technology company is trying to help us address.
And when you talk of data, we are talking about the information of these taxpayers we are referring to. So based on the development of this application and the solution we are providing, we've made it in such a way that every taxpayer is going to be enumerated, just like I mentioned.
Seated here in this hall are participants from state revenue offices. Issues bordering on tax compliance, multiple or double taxation, and harmonization of tax laws using new cutting-edge models have jeopardized the efforts of governments to provide infrastructure and social amenities using tax proceeds.
Not only in Nigeria but in West Africa, informal sector characterizes our economy, and with it comes the challenge of keeping track of the activities for the purpose of collecting lawful revenue from them.
And also use of incentive to encourage voluntary tax compliance. Digitalization is profoundly affecting the information based on which tax system are built.
Now, coming to your question, it is expected that at the end of this meeting, both state and federal government revenue services will come to use this new IT technology in tax generation and, of course, in achieving some of the benefits that comes with it. I'm Chimobi Walter Naji. It's back to you in the studios.
Well, thank you, Chimobi. Now, moving on. Still talking tax matters, the Minister of Finance, Zainab Ahmed, has continuously maintained that Nigeria does not have a debt problem, but that of revenue. Efforts aimed at raising a more tax-compliant society has seen a significant improvement, though did not meet expectations in the last 1 year. Leekatum Babatunde has been looking at efforts to bolster revenue in the country and the way forward.
Tax has remained a very important instrument for the survival of any economy, and its effects remain significant. It helps greatly in the redistribution of income and gives the government funds that it can use to finance public service. The ability of the state to generate a substantial amount of revenue from taxes opens up opportunities for it to provide public service and improve the economy. In Nigeria, mobilizing resources for economic development has been a very important step for government to sustain growth.
To identify people who are supposed to be paying tax that are not paying. So a lot of efforts is being put in expanding the tax base as well as improving the tax collection processes. And it's already yielding results. We've seen our taxpayer base grow from 13 million to 19 million. Is that enough for Nigeria? No, it's not, for a country of 195 million people. So there's still a lot of work that needs to be done.
Though the global economic recovery has been applauded and Nigeria is projected to rise by as much as 3% in the coming months, the resources are said to still remain below target.
That we are working on increasing our revenues so that we can rely less on debt going forward, which is part of the ERGP. The ERGP says that we will borrow initially to get out of recession, to start growing again, and as our revenues pick up, we'll be borrowing less.
Although Nigeria debt to GDP remains fairly okay, we are doing everything possible to broaden the revenue base so as to improve the tax to GDP ratio.
The International Monetary Fund has been calling for a review of tax policies in Nigeria with emphasis on taxing the richest 3% of the country's population, widening the tax base and increasing compliance on VAT.
Durable, sustainable way of being able to pay for the needs that we have is the tax base. We recommend generally between 0.5 and 1 percentage points of GDP per year in tax increases, partly through administrative improvements, partly through policy measures.
Despite the just-ended voluntary assets and incomes declaration scheme VAT, tax compliance has remained a huge challenge in Nigeria at a ratio of 6% to GDP. Business experts will be examining Nigeria's tax administration and revenue challenge.
Now, Oluwaseun Kadri joins us now to look at issues around Nigeria's tax administration and revenue generation. He's a consultant with Q Tax Consult and Trust. You're welcome.
Thank you very much for having me.
Okay, there has been this back and forth over the need to widen the tax net, though the federal government says that it wouldn't be increasing tax in a short run. And on the other side, the proponents of growing the SME sector have been calling for a deliberate effort to ease tax to encourage entrepreneurs. What's your take?
I would say increasing the tax base rather than increasing the tax rate is like the best approach in any world-class economy with respect to taxes. You know, I was opportune to conduct a research while I was in England on fundamental tax reform in Nigeria, and I advised strongly that Nigeria should not think of increasing the tax rate now. You know, rather it should think of widening the tax base, because a lot has not been gotten from the revenue, the rates we have at the moment. We have not gotten it, we don't have a large base. So you can imagine increasing the tax rate on those that are already complying. For example, majority of them the burden will be more on them because they're already complying. You're increasing the rate, and some of them will look for loopholes in order to reduce the tax they will pay. So it's not advisable for Nigeria to increase the tax rate.
So how do we now increase the tax base?
FRS has been making a tremendous effort on increasing the tax base in a couple of months since the administration of Babatunde Fowler. They've been able to increase the tax base and registered over 800,000 new taxpayers. However, that doesn't automatically turn into them paying taxes, but that's the first step, and that's the right step, you know, in the right direction as well.
Okay, considering the current economic state of Nigeria, do you agree with the IMF that Nigeria needs to do something about value-added tax, most especially on commodities like alcohol and tobacco?
Recently, you know, there's been an executive order that changed the value at the excise on taxes on tobacco and alcohol. However, that took effect some couple of months ago, so it's going to take some time for us to see the impact. Then we can now determine whether more taxes should be on these commodities. And you also have to think about the companies as well, because there are certain companies that are involved in this kind of businesses. So you have to be very careful not to kill those companies as well.
How long are we looking at?
We'll be looking at the new financial year, you know, looking at between when it started and a year after. Then we can start looking at how much impact that has made, the increase on alcohol and tobacco.
Okay, basically looking at imports, exports, and also excess tax, which particular area would you advise?
VAT is very big. VAT is enough to drive a large percentage of revenue we need in this economy. You know, however, the laws are quite stale. You know, a lot of countries are looking at how they can tax the digital economy. A lot of countries are looking at how they can improve collection of VAT. You know, Nigeria just needs to work more on have a better policy direction with respect to VAT, work on the loopholes in the laws. Because, for example, there are some non-resident companies that provide services to Nigerians, and those services are being consumed in Nigeria. However, some of them escape being taxed because they're outside the country, you know, and luckily for FRS, they were able to get a judgment recently which said companies that provide services, non-resident companies that provide services to Nigerians must also pay VAT. So we need to be very holistic with our approach with respect to VAT. We need to build a more robust VAT system, and we need to work on the stale laws on VAT.
Okay, considering the effort, are we actually on the right track?
Recently, there's been a proposed amendment to the VAT Act. However, I think there's still more that needs to be done in that regard, because I didn't see anywhere in the Act where they are trying to automate collection of VAT. You know, in the strict sense, you need a law to back collection of taxes, you know, and in VAT, with respect to VAT, for example, they have been trying a lot to automate the collection of VAT administratively, but in the strict sense, they need to incorporate it in the law so as for it to be very much effective, and I believe we'll get a lot of results from that.
Okay, what's your take on major multinationals with this habit of repatriating their funds without actually paying tax?
Yes, it's so funny that Nigeria is just waking up to the call that multinational enterprise have been shifting. There's something they call base erosion and profit shifting in tax. It's actually an instance where the tax base of Nigeria is being eroded by not paying the right amount of taxes in Nigeria and shifting of profit. For example, a company resident in Nigeria, instead of them paying taxes on the profits that they get in Nigeria, they shift those profits through various mechanisms to lower tax jurisdiction or to jurisdictions where they have little or no taxes, little or no economic activity, and they pay little or no taxes in those countries. So therefore, they rob us of the taxes that we're meant to get in Nigeria, and they shift those profits to other jurisdictions. But recently, FRS has signed a couple of agreements, and they've passed a couple of regulations, like the country-by-country reporting regulation, the transfer pricing regulation, which are going to curb these sharp practices, which has been happening over the years. And we believe from time we will start seeing the impact of those regulations that has been passed recently.
But should there be stiffer penalties for tax evasion?
As it
especially
stands,
by those multinationals.
As it stands right now, the regulation, the transfer pricing regulation to 2018 introduces a lot of very stiff penalties if the multinationals don't file certain returns, transfer pricing returns in due time. So we just have to give it some time. Let's see the impacts that this new regulation is going to have on this multinational. And also there is a new regulation called the country-by-country reporting regulation.
What's it about?
The country-by-country reporting regulation is the regulation that insists that multinational enterprises should file certain returns, based on whether they are in the country, based on whether they are in the country or outside the country. They are meant to file certain returns so we can see their financials, and the tax authority can conduct a risk analysis to see whether these multinationals are actually engaging in practices that are eroding the tax base of Nigeria.
Okay, casualization of labor. Does it have any impact on tax returns?
Casualization of labor in the strict sense doesn't have any impact on tax, because it's more of you just, rather than making a staff permanent, you make that staff a temporary staff. The law is very clear, and it has imposed the obligation of deducting taxes from revenue of employees by employers. So it doesn't really have a significant impact on taxes.
Now, let's look at the MSC's sector.
Yes.
What really is the argument that tax burden should be reduced on the sector?
Okay, I'll give you a very practical instance, for example. You see, you're an SME, for example, and you want to pay your taxes. You're really willing to pay your taxes, probably because your profit is not so much. However, you have to employ the services of an accountant or a tax consultant, for example. And the tax consultant might be billing you because there are certain documents that you need to file, like your financial statement, your audited accounts, your balance sheet, and you might not be able to do it as not being a professional. However, an accountant might be charging you quite a huge amount of money, and for, let's say, maybe it's charging you 100,000, whereas the tax you're meant to pay is just 30,000. An SME will be discouraged because you'll be looking at the profit he has made compared to the burden. So the burden of compliance is actually what is really eating really deep into the reason why a lot of SMEs are not paying taxes. So they have been clamoring for a special tax regime for SMEs. For example, with VAT as well, in different countries all over the world, they have a threshold. That's like if you don't pass this certain threshold, you are not entitled to file for VAT. But in Nigeria, it's not so. Immediately you register a company in Nigeria, you are entitled, and you commence business and you deal in vatable goods, you are entitled to file your VAT returns. So the burden of compliance is very huge on SMEs, and there are a lot of clamoring that we should have a special regime for these guys so that we can include them in the system and be able to generate more revenue from these guys.
Okay, how do we now align? Policymakers, on the other hand,
yes,
they focus on how to get something out of tax, and on the other hand, we have the SMEs that need a break to be able to grow. How do we align it to make sure the economy keeps
Okay, the good part
growing?
is that SMEs are willing to pay, from majority of people that I know that are entrepreneurs, but they complain a lot about the burden. So it's just for tax policy makers to work on a very favorable approach for these guys to be able to come forward and pay the due taxes without having to burden them so much on the process to pay those taxes.
Okay.
So they need to bridge the gap, you know, and the taxpayers should be cooperative on their end, while the policymakers should also be ready to shift ground in order to make it easier for these SMEs to pay their taxes and to reduce the burden of paying those taxes on them.
Okay. Thank you very much, Mr. Oluwaseun Gadari, with a consultant with Q-Tax Consults and Trust.
Thank you. Thank you very much for having me.
Nigeria's capital market sustained gain in the week ended Friday, the 26th of October 2018. Let's join Muplan Dakok for a review of the capital market.
The week ended 26th October saw the NSE All Share Index and market capitalization appreciating by 0.20% to close at 32,907.33 and 12.14 trillion naira. Investors exchanged a total of 1.45 billion shares worth 15.2 billion naira in 16,682 deals. The financial services industry led the activity chart with 1.22 billion shares traded in 10,520 deals. It was followed by the conglomerates industry with 92.190 million shares valued at 452.9 million naira. The third place was occupied by the consumer goods industry. Trading in the top three equities measured by volume recorded by FCMB, Access and Sterling Bank accounted for 695.3 million shares valued at 2 billion naira. Diamond Bank, Law Union on Rock and Fidelity led the top 10 prize gainers, while the losers were topped by Mark Nichols, Lafang Africa and Better Glass. Also traded during the week were 280,000 units of exchange-traded products ETPs valued at 3.385 million naira, as well as 20,430 units of federal government bonds valued at 20.7 million naira.
It's been described as an ugly October for stock in the U.S. as they recorded huge falls across board. Boside Abel brings us an update.
Stocks in Africa started the early hours of Monday, 29th October mixed. Trading in Kenya's Nairobi All Share, Namibia Overall Index and South Africa's JSE Africa Top 40 were positive, while Tunisia's Tunidex and Ghana's GSE Composite Index were on the low. Asian markets were also mixed as major Chinese indices fell more than 2% each by the end of the session. The Hang Seng Index advanced 0.38%, while the Shanghai Composite Index and Nikkei were on the red. European stocks started Monday morning higher as investors tracked a number of political events and waited for further earnings reports. German's DAX appreciated 0.64%. FTSE 100 and CAC 40 also started with gains. Meanwhile, in the United States, at around 7:30 a.m. on Monday morning, the Dow Jones Industrial Futures indicated a gain of 253.69 points at the open. Futures on the S&P 500 and Nasdaq Composite Index also pointed solid gains at the open.
Now let's see how the Naira is trading against other major currencies. Remember to send us your feedback via email businessexpress@nta.gov.ng. You can also reach us through our Twitter, and the handle is NTA News Now. Don't forget to use the hashtag BizExp showing there on your screen. Until we come your way again, I am Musa Abubakar. Enjoy the rest of the week.